Why did Bitcoin fall in October 2025? On October 10th, Bitcoin's value fell by 8.4% to $104,782 amid heightened tensions in the ongoing US-China trade war. Traders rushed the exits. Crypto sector on Friday saw more than $19 billion in liquidations across leveraged positions. US-China trade tensions triggered a sell-off in Bitcoin and altcoins. Crypto markets shed $150 billion as investors pulled $756 million from BTC and ETH ETFs. The crash came after U.S. President Donald Trump announced 100% tariffs on Chinese exports. Bitcoin's plunge in October 2025 was not a random crash. It was a perfect storm of macro factors, leveraged positions, and regulatory actions colliding. Let's walk through what likely drove the decline and what lessons are hidden in the chaos. It began with mounting US-China tensions. On October 10th, Bitcoin dropped sharply after the US announced a dramatic escalation in tariffs, including doubling down on export controls over key technology sectors. Markets reeled. Equities fell. Risk assets like crypto were hit particularly hard. Investors began to reassess the safe haven narrative often assigned to Bitcoin, treating it more like a volatile tech asset than a hedge. The spike in uncertainty triggered capital flight, especially from leveraged positions. That brings us to liquidations, one of the deadliest forces in a crypto downturn. Over $19 billion in leveraged crypto bets were liquidated in just 24 hours as margin calls cascaded across exchanges. Once the sell orders start, the downward spiral accelerates because many traders must exit positions at market price. As Bitcoin dipped below key technical supports, some sources point to $105,000. Automated stop-loss triggers amplified the slide. Simultaneously, regulatory and enforcement actions delivered a gut punch. The U.S. Department of Justice seized a massive haul of crypto, reportedly 127,271 BTC valued at $15 billion, tied to a Cambodian-based fraud network. This high-profile seizure fueled fear that governments were stepping more aggressively into crypto oversight and asset confiscation. In addition, market sentiment turned sharply risk-off. Crypto-related stocks like Coinbase, Robinhood, and Strategy slid as investors exited not only direct crypto positions, but also correlated equities. Altcoins were decimated, with some assets losing over 70% intraday. The broad crypto market lost over $150 billion in value during the same period. Bloomberg.com panic spread across the ecosystem, but the crash also cleansed excess leverage. Some analysts view this purge as a reset, removing unsustainable risk and opening space for more stable growth. Still, Bitcoin's bounce back, while notable, remains fragile, given that macro volatility persists. Geopolitics trade war escalation shattered confidence. Liquidations forced mass exits. Seized assets raised fears of more government intervention. Contagion in crypto tech-linked equities dragged sentiment. Structural risk leverage. Thin liquidity magnified the crash.